Hi, I'm Brittany Davis with Leanne Slaton. We are the House Sisters, and we are sisters selling houses.
Today we brought on board Ken Carson with Liberty Mutual because he's here to talk about all the hot topics that affect our buyer and seller clients in regards to insurance.
Yeah, so thank you so much for coming, Kenneth. Do you go by Kenneth, Ken, Kenny?
You know, I think the only people that have called me Ken and gotten away with it were my baseball coaches. It was one of those things where, no, it's Kenneth Carson. All right, Kenny, or all right, Ken.
Just be
but, you know, whatever
dickhead.
works. Whatever
And now
works.
me, I guess.
Yeah, right? Whatever works.
Kenneth Carson,
Yes.
I always call you Ken.
Yeah.
So, if I can shorthand a name, I will, though. That's my thing. That's how I roll.
Because she doesn't have a shorthanded name, so
My name
she's
doesn't have a nickname.
bitter.
Right.
Yeah. L.
Oh. Okay, so where do you want to start? Like, generally, is there like certain information you like to give buyers and sellers about insurance, or?
Yeah. I mean, when we're talking insurance, by the time we get to me, we're talking buyers, right? So, and that's your market. That's a big piece of your market. So when we're looking at buyers and we're getting into the boring insurance stuff, and that's where I usually come in, it turns out that over the past year, there's a lot of changes in my world that are affecting yours. And your buyers need to be aware of that, because the market, as that starts to shift, as different things affect the insurance market, they're going to affect your buyer's ability to get into that next home. So I think where I usually start is, you know, when we introduce ourselves as an extension of the House Sisters team, we want to make sure that your buyers know that we've got options and that we're going to be looking through that as part of your team, so that before they get those keys, they know that they're going to be in the best place possible.
Right. And I feel like a lot of buyers, even myself, when I first bought my home, they're like, okay, you need an insurance quote. And I was like, okay. And then I was presented with one. I'm like, cool. Yeah, that's great. I had no idea what I was looking at.
Yeah,
I didn't know what was
cover?
I didn't know.
The only thing that I was looking at that point was, does this meet the minimum requirement for the loan I'm trying to get? You know, and that's not enough.
Right. So hopefully today you can explain to us like how all that works and what to look for in those policies and quotes. And the cool thing about Kenneth's Liberty Mutual is that you're not just shopping Liberty Mutual. He's a broker, so he's able to shop multiple different organizations that will provide with multiple policies that can find you the best rate. So you're not having to shop each different organization and on your own. He can do it for you. So it's a one-stop shop to get the best policy.
Right. So for now, you guys are going to be seeing this logo here, but pretty soon you'll have the logo that's underneath here that you're not supposed to quite see yet. But that's going to be our branding that is going to officially roll out our broker platform.
Awesome.
Where we announce all the partnerships that we've got, and where that becomes an advantage for the buyers is now it's not just take it or leave it with one option. We've got several, and a lot of those kind of key into the market that you guys aim for specifically. So we are happy to help, and we're even happier that we've got a ton of choices.
Awesome. So like the first thing when someone's presented a policy, what should they be looking at? Like the cost of their home is say $600,000. What if it does burn down? Like, is that the only thing they're looking at, or what other things on the policy should they be aware of in trying to, protect their home?
Yeah, so that's probably bringing up the biggest question that's become more and more confusing over the past year, especially as market prices have changed. Now, when you're talking insurance, when you're talking real estate, when you're talking mortgage, you got to realize that the three parties are looking at that $600,000 house through three different sets of lenses.
Right.
Your set of lenses is taking into account the desirability of the neighborhood, how much land it's on, is it an open floor plan? Insurance doesn't care about that.
Right.
We don't care what that market value is. In fact, my set of lenses is more like X-ray goggles. I want to know what kind of plumbing that house has in those walls. I want to know how old that roof is. I want to know what the square footage and the building materials are. Mm-hmm. So when I come up with a number, it might not look like 600,000. A good example of that is a house here in Sacramento where median price is coming back down to around 550 or so. I'm starting to learn your guys' stuff now. Yeah. But now you take that exact same home, same square footage, and you put it oceanfront property in Southern California. Now you got a $3 million property.
Right.
But it's still made of the same wood. It's still the same roof, and my number will still look the same, which will not represent the actual market value of the house. Okay. So when we're having the conversation with some of those buyers, some of them will think automatically my insurance needs to be $600,000 because that's what I paid for the home. Mm-hmm. No, your insurance has to be what the general contractors say it's going to take to rebuild it, and so that number can look way different.
Can it be higher?
It can be. There's a few cases where it's higher. I mean, I come across homes where they've got heated marble floors in the bathroom. I didn't know that was a thing.
In Colorado, it's definitely a thing.
I guess it's a thing, but it's also location specific. California, we don't see too many basements, especially now finished basements. We see a lot of that type of construction in other areas. So there are cases where the rebuild cost of the home might be a little bit more.
Okay.
In most cases, with how market has shifted for you guys lately, it's usually a little bit less, but that can freak a buyer out. So we need to make sure we have that discussion up front.
Right. And then that also can depend on the cost of construction at the time.
I was going to say,
how often
last
should
year
you be re-looking at, because I know like the cost of lumber had gone way up in the last year and a half. So were people's policies needing to be upped to keep up with the cost of like the inflation of product?
Yeah, good question. And inflation is exactly what we key on. And there is what's called an inflation guard built into almost every major carrier's home insurance.
Oh, good.
So that it's not a penalty. It's just the insurance carriers need to keep up with accuracy. Because when lumber goes up, all those other pieces go up and the insurance protection needs to go up. So that might translate into a cost increase, a slight one, certainly not a penalty. It's just making sure your stuff is protected the right way.
Yeah. Absolutely.
So would you say they got into contract 3 years ago and their policy was a coverage for, $400,000 of rebuild costs, then lumber skyrockets up and that new cost is $500,000, but their policy still says $400,000. Would that protection cover that difference, or did they need to call their policyholder and say, hey, like I've noticed the inflation has increased. Do I need to make an adjustment, or do I need to add that, or does it automatically? Is it always built into a policy, or is it something you have to add on to your policy?
Yeah, good question. So most of the time, a reputable carrier has it built in, and that number automatically increases.
Okay.
So at every renewal, when I was working in the claims department, we were using the general contractor software. So we saw those quarterly adjustments. Automatically, your coverage will be increasing year over year. Okay. So that's why you'll see that $400,000 policy ain't $400,000 anymore. It's probably closer to $450 to $500 because that particular carrier has accounted for that need to adjust, and they're automatically doing it for you.
Oh, good. I don't even look at the renewals. Like when they send you the packet, I'm like, here's your new policy. I'm like,
Start looking now.
Put it in the folder. I don't know what to look for. So that's really good information.
And when you get the heated marble floors, make sure you at least call us. So, we know to
anything that's like unique or specific to, then we would need to update.
Good idea to at least have the discussion.
Right. And then I've heard before, like when you buy a house and you have all of your personal items. So we just talked about the actual rebuild cost. It will say your house burns down for the house, but what if everything inside it burns down, and then you're at a loss of all of your personal items. So I've heard take lots of pictures of it fully, bookmark how much your TV costs, put all that in a fire retardant safe, to be able to have proof of what all of the value of items you have in your personal, take lots of pictures. What is true? Is that true? Or
let me give you some advice straight from being a claims adjuster. It ain't entirely true.
Okay.
I do not have a receipt for my couch I bought in 2014.
Right.
And I don't know that I have a picture of us sitting on the couch. But
I'm sure you do somewhere.
Maybe. It's probably on my Friendster.
Maybe on the cloud, hopefully now.
But when we're thinking as a claims adjuster and my role in that department, I'm asking questions that are just going to lead us into what's reasonable. Mm-hmm. It's reasonable that we had a TV in the bedrooms. Okay. It's not reasonable that I had 10 TVs. So don't try that with me.
Well, what if you do? Because I have a friend that has 16 TVs in a loft area, and it's every sport channel he's loaded with TVs. So
that's a good idea to take a picture of.
Okay, right? So because it's unique. So if it's something that's not reasonable or believable, I guess you'd say, you probably need to have some proof of that.
Correct.
So there's just a general amount given for TV. It's not you had the $8,000 TV, so you're not getting a full payout for that. Or
you could.
What if you shop at Restoration Hardware? And
there you go.
Everything's super expensive.
Yep. And anything that's unique, have some documentation on it. And, most of us by now, we've got a snapshot of our credit card statements. So we can go back as long as we need to when we got the MacBook Pro or when I got that last iPad. That stuff's going to be easy to track down.
Okay. Yeah,
and once again, those things are reasonable. But when you're telling me that, I had a wall full of Jordans, I paid cash for all of them, I don't have any receipts, and all of them were worth, I don't know, $100,000, I'm going to ask a second question if I'm in claims. If you got some type of documentation like your eBay records, that's going to work. Mm-hmm. But something like your standard furniture, your electronics, your clothing, the insurance carriers, for the most part, are going to give you a break. If it's reasonable, we're going to pay on it. We're going to pay as much as possible. If there's anything unique outside of that, of course, have some documentation on it, because in the event of some type of total loss, claims is going to work with you to get it done right.
And I've also heard that you can add like extra coverage for things like jewelry or firearms or, like antiques and things like that. So how does that work? Is that in addition to your policy?
Yeah, so there are limits, and every company does this. There are limits that are built into certain categories. Most of those categories are the stuff that appreciates in price. So jewelry is a good example.
So let's use a wedding ring as an example, because we have I dropped my wedding ring down the sink and I didn't put it on my policy.
Yeah, and that does not sound out of the norm. Like I said, claims, I saw all that. I saw a ring get lost in a garden glove. I paid $20,000 for it, and then she found it and sent the check back. This is stuff that does happen. As crazy as some of that stuff sounds, we see all that in claims. So with jewelry specifically, same thing with firearms and some of the antiques, you can have those insured separately for the full value, but also they take off the limits of the types of coverage. So something like banging your diamond ring up against the door frame and the diamond falls out, it happens. And when that $10,000 diamond is gone, your standard home insurance says, no, that's not on the covered list of things that we protect against. But now suddenly insuring it separately, you've got what's called that breakage coverage, and now you're good.
Oh, okay. That makes sense.
So call your insurance agent, call you and tell them, hey, I have like this really like luxurious ring and I really want it covered, and then you'll add a clause in the policy that will include it then. And same with like firearms and stuff too.
Same thing. If there's anything unique, the antiques, collector cards, stuff that you want documented separate from perhaps any limits that might be on there, I may have the discussion and say, you know what, that particular category like collector cards is already taken care of, but get me some more documentation so I can note some of the unique values.
Yeah.
If it's jewelry, we might end up doing something separate.
Okay.
Nice.
That's cool. Good to know.
Yeah.
Yeah. Totally.
Sounds like I need to make a couple phone calls.
Yeah. So then my next biggest thing that I'm running into in our area specifically, fire insurance. What's going on?
Insurance companies are telling you that they don't want you without telling you that they don't want you.
Right.
And this is a really hard concept right now, but as California continues to get destroyed by wildfires every year, it's like, what's the discussion every year? This is the most destructive in California history. Fast forward the next year, this is now the most destructive in California history. We've had like the 10 most destructive in our entire state history in like the past decade. And so as that continues to happen, insurance carriers that have been covering some of those high risk areas, it's just not worth it for them to do business there anymore, because your premium coming in is not worth me on the claim side paying out that $800,000 check times every home in this zip code that is burned down every single year.
And that's why some companies have actually left California as a whole. Like there's some insurance companies that do not provide insurance in California.
That's right. We've had one of the top 5 players in the entire country just announce a month and a half ago, we're no longer doing home insurance in California. You guys can look that up on your own. But we're seeing that same exact pattern as that piece of the business becomes less and less sustainable because of the risk of fires. Insurance carriers are just going to walk away and they're going to say, all of this zip code, I don't care how many trees you've cleared from your front yard.
Or how close you are to a fire hydrant. And
we just don't want to touch this entire zip code because the potential for a payout is too high for us. And that is going to destroy us on the financial side.
Yeah. So what areas like around the greater Sacramento area require fire insurance? I'm going to just give like 3. I know we have like a lot of wooded areas. We have, Cool, Auburn, we have Placerville, and then we've got, Jackson and all that. So what areas are you seeing? Like if there is a required fire insurance, what does that look like monetarily for someone trying to obtain that insurance? And also like, are there areas that people just can't get insurance at all? And then what do you do there? So
full transparency, home insurance is fire insurance. It's just the different description that different parties use. We hear hazard insurance, fire insurance, homeowners. It's the exact same thing. But some companies are not willing to cover certain areas because of that risk. So as you go up the Highway 50 corridor, as you go up Interstate 80, we're seeing some of those restrictions come downhill. It used to be all the way up in Forest Hill, you can still get coverage from a standard company. As those restrictions get tighter and tighter, all the big companies are walking away, and we're left with one last resort plan, which is known as California Fair Plan.
Okay.
And that pricing can be 3 to 10 times the amount that a standard company would offer in Sacramento, for example.
And so you have to have a home insurance policy and the Cal.
That's right. You have to have California Fair Plan just to protect for the wildfire coverage, and then a second layer of coverage to handle everything else.
So
and
what
those
if
two
you
work
didn't
together.
get that? Do you? It's required by the lender. The lender requires it, so you probably wouldn't. But if you had a home free and clear, say you didn't finance it, you could potentially not have any insurance, right?
Yeah.
And be like, oh,
Be
that's
a huge risk.
huge risk. But
Right. Well, we're seeing it now with folks who've lived in the foothills for 20, 30 years. They're retired. They're on fixed income. They've been with an insurance company 20 plus years, and they just got a letter in the mail that says, y'all ain't worth it anymore. We're canceling you. And so now their only choice when they come to a broker platform and we say, well, we got 12 other companies that rejected you also, but here's California Fair Plan for $8,000. What is that going to do as far as a decision when it comes to your fixed income or your retirement income or even your standard income? If you are free and clear on that home, you're going to have people making a decision that perhaps we're going to go without the most important coverage we need, or we got to pull the ripcord and we got to sell this house and get the heck out of here because no insurance companies are going to help us out.
So what happens when you have a house with a mortgage loan on it and your insurance company says, we're not going to cover you anymore? Then
how do you obtain the
well,
house?
you're required to have that insurance, but what if you just can't get it?
Yeah.
Or can't qualify for that?
Right. Well, it's two different scenarios. It's affecting new buyers, right? So these addresses that you all are sending me for your buyers that you're going to show open houses up in the foothills, I'm coming back letting you know that this is what the pricing is. And then our lender partners are letting us know that's not going to fly with their loan.
Because it would mess up their monthly expenditures against their income. So that raises their debt to income ratio, and it's kind of computed as part of the payment.
Yep.
Then it may put you out of what you can qualify for as a buyer.
So you may not qualify on the front end. So that presents an issue, right? But what about the folks that we do get into contract? They do close on a standard insurance company. That standard insurance company says the very next year, your rates are either going up this much or worst case, they cancel you. Now we've got this other policy that we're going to replace it with. It's 8 times the cost. What's that going to do to their mortgage payment?
Right.
So that's a discussion we're having with our lenders now. What is this doing to the folks that did move up there a couple years ago and now just got the rug pulled out from underneath them? So
and in those situations, are you seeing that they're forced to sell at that point?
It's a difficult decision because some of them are forced to go with that more expensive policy. And then we talk about escrow shortages in that account that's been built over the past couple years. So a lot of discussions that now we're getting our lenders involved in because this is a trickle down effect that's affecting buyers on the front end and existing homeowners.
Oh my gosh.
And then they may have to default on their payments.
Something's gonna give. Yep.
Gosh.
Wow. And then it's how desirable is that area if it's so difficult or so expensive to obtain insurance on it?
Right.
So it really minimizes the amount of buyers who can afford, who are going to be looking there, which is going to affect your home's value.
Yeah.
Right.
Yeah.
Purchasing power is going to go down, and that's right along the lines of your language. But more importantly, when we see the insurance come back at 12 to 16,000 on some of these properties, how desirable, like you said, how desirable does that area become as more of the market starts to become aware that particular variable is unaffordable?
Right. Man, good info. Anything
You love
else?
this nerdy stuff, this nerdy insurance stuff.
I love it.
Don't be trying to go out and get an insurance license after this, okay? I've already got all your competitors.
I'm very overwhelmed right now.
Right. Okay, so let's just talk about one more kind of point and one more question that we are hearing on our end, but also I'm interested in knowing. Do smart devices lower your policy?
How do they impact your policy?
How do they impact your policy as far as do you get discounts for having them and things like that?
And what smart devices specifically are the best?
Yeah,
for
good
your
question.
Are the best, investments.
So they can, and when we're talking smart devices, we're talking monitored alarms, we're talking water leak detection systems now. Ooh. That is going to be where it's most popular. In fact, when you go to the data from any claims department, you're going to find the number one category is water non-weather. And that means the majority of the claims that are filed is something like a plumbing leak or something like a toilet overflowing or the roof leaking. Maybe that's related to weather, but it's usually plumbing stuff. And that's those X-ray goggles I was telling you about when insurance carriers are determining coverage and rates. So when you've got some type of system that's monitoring that can minimize that risk, like new construction having fire sprinklers to prevent a kitchen fire from taking the whole house out.
Right.
When you've got systems in the house like water leak detection, those smart devices that will alert you that your water meter is running, but you ain't home, so nothing's on. That's a plumbing leak, and you have the ability to shut that down remotely.
Ooh, I need that.
That makes the difference between some leak under the slab.
Like, does it just turn off your main?
It can. Yep.
That would be awesome. There's sometimes where I turn on our pool filler and then I forget.
Yes.
My ADD kicks in and I'm out the door, and then I'm getting texts from neighbors like, hey, your front yard is flooding. Like, your overflow valve is like gushing hot water. And I'm like, ooh, I'm not home.
Yeah.
I'm like calling neighbors to be like, can you go shut off my main
right.
like until I get home? And my husband's texting me like, you idiot, come on.
He's like, again?
It happens. We've left stuff on. I do the same thing with my pool, and the same thing with the back and the front yard getting flooded a little bit. But those smart devices, home insurance carriers recognize that. They've got 100 plus years of data. So they're looking at if this is the category that's the number one claim that's being filed, if there's something out there that's preventing this from getting worse, let's credit that. And so the different carriers that we work with, we can focus on a few. If something like a leak detection system's in there, I recognize right away when newer homes have fire sprinklers and what 3 or 4 companies are going to credit that policy back with a much more competitive rate. So the answer in short is yes, but we're seeing changes.
Right. Awesome. Nice. And then speaking of discounts, so we like to help our first responders, like they're near and dear to our house, or our house. My house too. My husband's a first responder. He's in my house. So we want to, let the public know like what occupations can be eligible for discounts?
Yeah, so that's a great question. And some carriers will not ask. They won't have.
I've never been asked that question. And I'm like, I'm finding out now that we're in like the first responder world, like people are like, oh, you get a discount on your cell phone or you get a discount on this. I'm like, man, we need to do that. Like 10%, it all adds up or whatever it is.
Yeah.
It all adds up. And the end of the day, like with all of our bills, like I'm like, yeah, I'm going to pull from my resources of discounts.
Right.
This is awesome.
Yeah. You'll have some carriers out there that will advertise. You'll see the TV commercials that focus on military,
veterans,
veterans, police. But the truth is just about every carrier is going to have some type of occupational discount.
Nice.
Liberty Mutual particularly, we've had one of our longest corporate partnerships has been with IAFF, International Association of Firefighters, and Fraternal Order of Police. So our first responders have been built into our culture. So that's something where on the Liberty Mutual side, specifically when I use that carrier, we're going to see a bit of a break.
Awesome.
When I use some of my other carriers, they may focus on a military discount. They may focus on something similar, maybe without the corporate partnership with IAFF, but they're still going to have something built in. Every carrier knows how important it is to recognize some of our first responders. And so they're going to build something in for that. They may not have a TV commercial, but the truth is a lot of them are going to try to account for that.
Yeah. And what about teachers? Do you have anything for teachers?
Yes.
Because I feel like sometimes they get like shafted on the financially resources, and I want to like kind of guide them in as well.
Yeah, we've seen that even with the district that I'm in, Elk Grove Unified School District. We have a bunch of their staff that are clients of ours, particularly one of our carriers has a specific program for our educators. It's an educator's endorsement automatically built in as soon as I type in that occupation. And what it'll do is it'll say, if you're driving on school business, chaperone for a field trip, on work business for whatever reason, if you're in an accident, $0 deductible applies just because you're in the education field.
That's amazing. $0 deductible, because that's sometimes like just steers people away from filing a claim because they're like, man, right now I can't afford that $1,000 deductible or whatever it is. So that's really awesome.
Yeah. So educators endorsements, ask about those because different carriers will have that too. Like I said, transparency, all carriers need to recognize it. Some of them do more than others. So when you ask the question or when they should be asking the question, then you'll probably find that you'll get a few breaks that are out there.
Awesome. That's awesome. Yeah. I'm really excited to be able to convey that to all my fire families out there.
And teacher friends too. And our sister is a teacher. So that's pretty awesome.
Yeah.
Awesome. She's going to get ready to buy her first house pretty soon.
we'll send her your way.
Yeah.
Excellent.
Absolutely. Thanks for being on our show.
Yeah,
Of
thank
course,
you so much.
I love it. Thank you. We need to. I think the crew was saying we're going to figure out how to handle the shiny scalp glare. You guys do that after.
Well, you should
maybe
have
it's
put
like
your bronzer on. You shouldn't have put that shiny bronzer on.
Yeah.
today.
If you go to like MAC Cosmetics, you could probably get like a matte.
Yeah, we needed something. I didn't know the lights were going to be so bright, but we'll deal with it in post editing.
But at least you're not sweating.
We'll put a filter
Yes.
on you.
No,
filter
I'm
on
definitely sweating.
Make you look like a cat.
Yeah, I'm definitely sweating. This is a lot of questions, but I was prepared.
You were.
Claims
Yeah,
department,
I'm
that
impressed.
certainly helped.
You've seen it all.
I've seen.
How long have you been in the industry, the insurance industry?
So it was 2 years in claims, and to kind of give you some dates, right when I got back from training on the East Coast, Hurricane Sandy hit, or Superstorm Sandy hit on the East Coast. So I went from bike theft claims to now all of a sudden my entire home is floating into the ocean.
Yeah.
And how do I handle that? So it was a steep learning curve, but it taught me all 70 pages of that home insurance policy. So now when you all ask any of those questions, I know every word, every sentence in that, and every carrier uses the same framework. So no matter what
nice.
carrier we're selling or that we're reviewing, we know that the coverage is going to work the same. And so any of those hypothetical questions, as odd as they may sound, like getting a wedding ring stuck in a gardener's glove, that stuff happens.
You've seen it.
Yeah.
we've seen
Well,
it.
I think the best form of training and like learning a new profession or just learning something in general is just by being in it.
Yeah.
Yeah.
And just doing it,
Yeah.
It's way more, you absorb it way more when you're experiencing it than if you are just being kind of, lectured at by,
Right.
video or, seminar. So that's how I learned real estate. So I can always appreciate people who.
Yeah. So now about a
Jump
total
in.
of about a decade that I've been here.
That's
so,
awesome.
Cool.
And always
10
at
years.
Liberty Mutual?
No, I started with another carrier in their claims department. Ironically, now we sell that carrier. Once again, I can't show you the logo underneath here, but when we roll that out, we'll be able to announce all those other partnerships.
Awesome.
And that
Cool.
particular carrier, and I've got half their claims team on speed dial because that's my old coworkers.
I love
so
that.
it's really cool to come
Yeah.
full circle and speak to the value of them because that used to be my team. So
And one more quick question before you go, though. So real estate is like a
Now I
small
gotta go.
world, right? Like you really see a lot of this. Like there's a small amount of people doing a large amount of business as far as realtors
20%
go.
of the people do 80% of the work in all industries.
But is insurance that way too? Like you really do see a lot and hear a lot of the same names and people.
we do.
Like you guys cross over a lot.
Yeah, we see
love
that,
that.
in the insurance world, there's a lot of us that have, one degree of separation because of the different departments that we've been in.
Yeah.
Some of my old claims teams are now in underwriting. Some of them are gone over to the commercial world. A few of us have survived in the sales world for a little while.
Hey, there you go.
But because of that education, I think that's what gave us a huge advantage. And, now we just get to serve as a resource, answer some of these crucial questions and give people the transparency that perhaps they wouldn't have had.
Yeah.
Awesome.
Very cool.
Well, thank you so
man.
much. Yeah,
Yes,
thank you
of
so much
course.
for coming out. And
Yeah.
it was super educational. I got to go call my insurance.
Please wake up.
Company.
This stuff is boring. So, yeah.
But yeah, so thank you so much. And we will see you next time on the House Sisters podcast.
Sisters selling houses.